A client might look at a specific problem in their business as a brick wall in front of them. I just see it as a demolition project that needs to be renovated. Nothing in life is easy. However, everything in life is what we make of it. The number one source of our clients is the network or the referrals from the network. Welcome to Osage Financial. If you're a student, we hope you find the information in this episode valuable to you. If you're a company looking for tax, advisory, or accounting services, click the link below and we'll be in touch with you as soon as possible. In today's episode, we'll be discussing what is fractional accounting. We get this question a lot as we talk to different clients about the services that we offer, as we talk to students whenever we go on campus visits. Even as I hire accountants to onboard to our company, they always want to know, what is fractional accounting? In last week's episode, we discussed the type of services that we offer: advisory, tax, and fractional accounting. So today, we'll answer the question, what is fractional accounting? Essentially, fractional accounting is accounting on a part-time basis. There are a lot of companies that hire accountants in-house, and there are some companies that would like to hire an accountant in-house but may not afford the cost of an accountant. So fractional accounting is accounting on a part-time basis, sometimes on a short-term basis. We'll discuss a few examples of companies that we work with and the types of accounting services that we offer. Remember, fractional accounting is accounting on a part-time or fractional basis. There are three different types of accounting services that we offer fractionally. We offer CFO level services, controller level services, and accountant level services. I have a list of questions here, so I'll start answering some of those questions. So the first question that we have is, how do we get our clients as a small accounting firm? This is probably the number one question, not just for an accounting business like our business, but for every business that's in business. Getting clients is the reason why everyone is in business. You get clients so that those clients can turn into revenue. That revenue can turn into paying your employees, paying your bills, and profits. The goal is, at the end of the day, profits. So for us, we use social media to get our clients. We use Facebook, we use Instagram, Twitter, TikTok. I don't personally use TikTok, but our marketing team uses TikTok to get us those clients. And of course, you're watching this video on YouTube or any social media platform, that's us doing that marketing to get those clients. What we've realized, though, as we look through all of the marketing channels that we use, is that the number one source of our clients is the network or the referrals from the network. If we service one client, our goal obviously is to do the best job possible. And we realize that that client will tell our next potential clients that, hey, Osage Financial is the best option if you're looking for an accounting team on a part-time basis. So the network that we have from past clients refers newer clients to us, and that creates our key driver of clients. And when I look at the numbers, 95% of our clients come from that network. Of course, we'll continue to use social media, websites, Google, YouTube to generate awareness of our business. And hopefully that awareness turns into a client, and that client turns into more clients and refers more clients to our business and our services. So this is a very good question that I look at every day as I manage the business. The next question that I'm seeing here is, what is the best way to bill a client? Reoccurring billing or one-time service? So this comes from an accounting student. Well, the best way to bill a client for an accounting firm like us, with 4 full-time accountants, we have a marketing team with us as well. The best way to bill a client is a reoccurring billing. Reoccurring billing basically means if you have Netflix, you're paying for your Netflix each month. That's a reoccurring billing. You're not paying for Netflix once a year or once every 10 years. Each month we bill that client. And what we do with our clients is, for us and for the client, we have a 60-day term to either extend or cancel the agreement. That gives flexibility to ourselves as we plan and make sure that we have availability for our accountants. And of course, for the client, that way, if they need a limited term service, remember fractional accounting, if the client needs limited term service, they know that in 60 days they will either terminate the service or in 60 days, they'll extend the service for another 90 days or so. So recurring billing is the best for us. Of course, we enjoy billing clients in any way that the client is willing to pay. So one-time services, we always take a client on a one-time service, either on a 60-day project or on a 2-day project. Some clients just need an LOC filed for them. We do that. If we file an LOC for them, hopefully they get into business. If they get into business, they'll need more services from us. So one-time services, we do. And then recurring billing is pretty much the best way to bill a client. The third question that we have is, on the accounting level, fractional accounting, what services do we offer? That's a good question. So we have 3 levels of service, right? The CFO level, the controller level, and the accountant level. The accountant level is basically on like a bookkeeping with the knowledge of an accountant. So the services that we offer there would be the data entry for the accounts payable. If you're new to accounting, accounts payable means the money that you have to pay a vendor for materials or for services. So we're in an office, we pay rent for our office, that's an account payable. The utilities are on in our office, so we have internet, we have electricity, that's an account payable. So each business would have a different set of accounts payable, would enter those invoices onto their QuickBooks or accounting software so that we can go ahead and review the financials on the P&L on the balance sheet. The P&L is the profit and loss, where the financials go for the company. So revenues, cost of goods sold, expenses, net income, that's the profit and loss. Or on the balance sheet, if they prepay some of their services. So like us, we do recurring billing, so the customer pays us every month. Some vendors take prepayments of services, so you pay every 6 months, especially marketing vendors. Marketing vendors may make you prepay shipping of direct mail or any type of services that you pay ahead of time, and then they just take the payment each month from the payments that you've already made. So if you pay ahead of time, that accounts payable goes to the balance sheet, and each time you recognize that payment on the P&L. So that's the type of services I would offer on an accountant level, accounts payable. Also on an accountant level, we offer accounts receivable. Accounts receivable are essentially revenues from a business, right? One for our clients is a cleaning company. Small company, it's a 2-man team. They clean offices, they do power washing, they clean apartments. They also help people move from apartments or houses. What we did with them on the accountant level is we essentially helped them understand what are the key revenue drivers, right? What are the key receivable lines? So cleaning for houses, cleaning for apartments, pressure washing, so commercial pressure washing. We asked if they are interested or if they do commercial cleaning. They're interested in it, so we said let's track that revenue line to make sure that we have all these different revenue lines so that we can see where you're most profitable or where is the most of your money coming from. And that's an accountant level type of service to help the client understand what are your key revenue drivers, what are your key receivables, where is the money coming from. And of course, on the receivable side, we need to be able to bill the client. So we taught the client, hey, if you go and you clean an apartment, you need to send an invoice to that customer so that that customer has an option to pay you by cash, credit card, check, or whatever form. That's that cycle of accounts receivable. And then we track that data back into the financial system that they use. For most clients, it's QuickBooks. So we got a little technical there with the receivables. We get technical in everything that we do here in accounting and here at Osage Financial. The fourth question that we have here is, can you give an example of a company that has significantly benefited from your accounting services? Great, yeah. So we enjoy all of our clients. Right now we have at least 10 clients on different levels of services. On our website, we have level 1, 2, and 3. Based on the needs of each client falls within any one of those classes. Obviously, some may be in between just based on the revenue or based on, again, on their needs. So an example of a company that has benefited, I use an example for cleaning company, so I'll use a different type of company. I'll use a pest control company. A few months ago, I went on a ride-along. A ride-along basically means you go with a technician in the field while they do the work that they do. I went on a ride-along with a pest control company. It's a single-man, single-truck pest control company. He bills his customers from physical paper invoices, gives the customer the invoice to either mail-in payment, or he literally writes down the customer's credit card on that invoice, and then when he goes home, he types in the credit card number into his QuickBooks or into his bank to bill the customer. So I spent the whole day with him, about 8 hours and change. We had lunch, and it was a great day. However, in that observation, I was able to see points where he could improve the efficiency on his services and on his time. What we did with that client is we decided that it's best if he used a CRM software, which is a customer relationship management software, to invoice the client. So if he goes and does a rodent save service, basically meaning putting traps for rodents around the customer's house, business, apartment, whatever, or if he does a mosquito spray, he needs to invoice that line for rodent service, mosquito spray, send the invoice to the client with a link for payment. It's easy on the client for record keeping. They have an invoice in the email, in their mail. They can just save it on their desktop or wherever they save the information. And then it's easier on his accounts receivables, right? The payment from the client or the billing to the client. It's easier for that client that he bills to just put their credit card details, pays the pest control company, the funds go into the bank, and this transaction circle is completed. We sat down with him after the ride along, and we went through all of his service types: rodent service, mosquito spray, roach spray, traps. So here's about 10 different types of services that he offers. We created a different revenue line. In accounting, we call it a GL line or GL account for each of his revenues. And then we created some discount codes. So if he does multiple services to a client, he may decide he wants to give a $50 discount. So we need to discount that revenue, create a discount code so that we can have a net revenue. So if his revenue is $10,000, he did $500 in discounts for the month. His revenue net of discounts is $9,500. So we help him understand how his revenue is flowing, where his revenue is coming from, net of discounts. And then below that, we said, okay, in the ride along, you paid for gas. How do you track that? Do you use your personal money to pay for gas? Which you shouldn't. You should use your business account to pay for gas. If you use cash from the business that the customer paid you in cash, we need to recognize that this cash from the customer is applied to a specific invoice, and we use some of that cash to pay for gas, right? These are the cost of goods. So your materials, your fuel, and importantly, we had to make sure that he paid himself for his labor. He's a single man truck. We don't want him taking the money from the business because he does the work himself, and deservedly so, he needs to get paid. But we need him paying himself in a way that makes sense to taxation and to his profits. And eventually, if he wants to sell the business or grow the business, he needs to understand how much does each technician cost. In this case, how much does he cost to the business? And at the end, what are the gross profits of the business? And then below gross profits, we have expenses. At the end of the expenses, what is the net income of the business? So the company that I think we've had the most impact on, off the top of my mind, is the pest control company. We went from him using paper invoicing to the customer to him using a CRM software to invoice the customer. That way the customer can easily pay. We want to make sure that there's the most convenience to the customer as possible when the customer is invoiced, that the customer can easily pay. Imagine if you go to Starbucks and then Starbucks has to write down your order on a piece of paper, and then they have to mail you your invoice so that you can pay them just for a cup of coffee. It doesn't make any sense, right? You go to Starbucks, you order your coffee, you swipe your card or you use your app, you get your product, and you're good to go. So we brought that efficiency to his business, and then we also brought the understanding of what are your 10 revenue drivers? What are your discounts that you're giving the customers? What is your net revenue? What are your cost of goods? What are your expenses? And then at the bottom, what is your net income? How much are you making at the end of the day, at the end of the month? How much is your business making? And for the long-term goals, for the long-term planning, having all that data in one place genuinely benefited him and his business. And to this day, he's always asking me, "Can you go on another ride along with me? I need more efficiency in my business." And eventually I will. I'll go on another ride along with him. But I think we've really benefited him on his business. So we'll go to the fifth question. Is it easy? Is it easy? I'm guessing they were wanting to ask, is the business easy? I think nothing in life is easy. However, everything in life is what we make of it. For myself and the team at Osage Financial, we make the best of what we have. I had the opportunity to start this business from a client that had absolute belief in me. Now, this belief depends on my perspective. Sometimes I call it a golden handcuff. Sometimes I call it the opportunity of a lifetime, right? It's a golden handcuff because the first 2 years of our accounting firm, we could not get any new clients because we're just dedicated to servicing this one client. So that's a golden handcuff. We're getting paid, but we're just stuck with that one client, right? It's also an opportunity of a lifetime because from when I went to college for accounting, I knew that I would start an accounting firm and grow that firm to the best in the industry. So that client literally gave us the opportunity to do exactly what we love to do. So it's not easy. It's all opportunity and it's all perspective. And I think when you go into business, any type of business or any career, really, if you're an accountant and you're looking at this video and you're going through your career or you're going through school, nothing is easy. It's just what we make of it. If the way I approach life is everything is as good as I make it. If I never have a bad day, it's not that bad days don't happen, it's how do I turn around and look at that day. I look at losses as lessons. I look at everything with the optimistic mind frame. And when I look at clients, a client might look at a specific problem in their business as a brick wall in front of them. I just see it as a demolition project that needs to be renovated, right? It's the mindset that I approach business. And when we take that mindset to different clients, we see that they find the opportunity and they find the profits in the advice that we give to them. And these are the 5 questions that we're asking, that were asked to us that we're answering. And just to go back to when we started, what is fractional accounting? It's just accounting on a part-time basis and then offering different levels of services to different clients based on their needs. Some clients may need high-level CFO type of accounting, which is financial reporting, balance sheet tie-outs, deep financials for banks, or even if they want to go to the IPO route or to mergers and acquisitions if they want to sell their company. CFO level accounting will offer that, will provide that at the highest quality of service. Some people may just want controller level accounting, which is, hey, our bookkeepers are already doing all the work. We need you to review the balance sheet, the profit and loss. We need you to do the financial reporting every month. We provide that as well. And some people, like the pest control company or the cleaning company I gave examples of, they just need an accountant helping them understand what are the impacts of the actions that they're doing in their business and how does that affect their financials, and at the end of the day, how does that affect their net income and their profits. So thank you guys for watching episode 2 of us here at Osage Financial, answering the question, what is fractional accounting, and the 5 questions that we get as we go through our business from either students or people that we meet or clients or potential employees. Have a good day.